Supply of gold is very tight right now and demand is growing, especially from the central banks. And pretty soon, it's not going to be about the price, it's going to be about the availability at all to even be able to get any gold. There's a run on the bank, and it's not your local retail bank. It's not the type of bank run that you've heard about before. It's a global thing where all of the central banks are having trouble getting the gold that they want. We're going to get into it. I'm going to tell you all about why everything that you've been seeing with the gold market lately, these really weird things that have been happening, it's all making sense when you put it in this perspective. So let's get into it. And please click like on the video. It helps us help more people to avoid the train wreck that so many people are about to get blindsided by, and actually are in fact being blindsided by right now. One of the aspects of the central bank run that's playing out is all the gold repatriation. That's part of it. An example of this is Germany. Since 2013, Germany's Bundesbank has been bringing home hundreds of tons of gold, which are from New York, from London, from Paris. By 2020, it had relocated 337 billion euros worth of gold back to Frankfurt. Officials insist this is about risk diversification, but skeptics argue that the move signals declining trust in the US dollar system. You're seeing it with the possible BRICS currency, you're seeing it with gold, you're seeing it with some cryptocurrencies where the dollar's dominance is in question and is becoming more and more widely seen differently than it used to be. You can go back multiple years, going back to the videos I made about how China and Russia were pigging out on gold, and I was telling you guys to buy gold, and now here we are.
You've got China and Russia both aggressively buying gold. The people of Russia are incredibly aggressively buying gold because their ruble has absolutely collapsed. There's no certainty about where the economy is going.
Geopolitical tensions. The US and Europe relations have been strained by trade wars, sanctions on Russia, and disagreements over NATO spending. And that might be one of the reasons that Germany's been repatriating all of this gold as an assertion of financial independence. You're also seeing Austria, the Netherlands, Turkey, even Venezuela moving more gold home in recent years. As more nations follow suit, it's triggering a global gold rush because the confidence in the US dollar system is completely weakening worldwide. That's why you're seeing Japan and China and Canada, part of the reason that they're releasing some US treasuries into the wild, not buying American debt as much. But this is going to be a really tough year for the US dollar.
And that's the thing you notice, is that gold always comes down to no matter what. There can be a war, there can be sanctions, and gold is still, even after the currency collapses, gold is still the asset that everybody goes to worldwide, and it always has value.
Conspiracy theorists speculate that some gold may have been sold, leased, or even lost. When Germany initially requested to inspect the US-held gold in 2012, the Fed reportedly refused, which is one of the reasons that suspicions were fueled that maybe the gold's not all there. The Bundesbank later did do an audit and confirmed that the gold was there, but the early secrecy kind of freaked out a lot of nations and they started wondering why the secrecy? Kind of like now, we're asking why can't we audit Fort Knox? Central banks are causing a global gold shortage. In 2022, central banks bought over 1,000 tons of gold, the most in over 55 years. In 2023, they added another 1,037 tons. In 2024, central banks purchased a total of 1,044.6 metric tons of gold, exceeding the 1,000 metric ton mark for a third consecutive year. And that extends a streak now at 16 years of central banks being net gold buyers. Countries like China, Russia, Austria, India are all loading up on gold. Even Poland is buying a lot. And I always talk to you about how many countries are buying gold. And I'm telling you that there's a lot more than there used to be. And the countries that there are buying larger amounts or more significant amounts. So on screen, here's just a list from World Gold Council showing you all the countries that the central banks own gold. And it's a lot of them. I'm telling you, it used to be a few major countries. Now every country's in on the game. There's a run on gold worldwide. China even added over 300 tons of gold in just 1 year. And that's how much they purchased. China's also the largest gold producer. They dig up more gold out of the ground than any other nation on the earth. China digs up the most, they also import the most, and they bought over 300 tons in a year.
If I'm telling you that I'm mostly invested in gold and gold mining companies and gold related assets, that's because I believe that is going to be an incredible investment going forward.
And why is this all happening, you may wonder? A lot of reasons, but the main reasons are that they're trying to de-dollarize, they're trying to get away from the US dollar. As long as you're connected to the US dollar system, they have power over you in terms of sanctions and controls and that sort of thing. So any nation that's adversarial with America is pushing right now really strongly to de-dollarize and not have any connection with the US dollar. We could be witnessing the early stages of a new monetary order, with central banks stockpiling gold at record rates and cryptocurrencies emerging as alternatives. The era of dollar supremacy may face its greatest challenge yet. And it was during World War II where nations would take their artwork and their gold and send it to safer places. So you'd have gold and you'd say, you know what, we're in Europe at a time of war, we need to send this gold for safekeeping over to America. And a lot of countries did that, or they sent it to Switzerland just to get it out of the way of the war so they don't get it lost at some point. But then when the war ended, instead of taking back all the gold that was being stored for safekeeping, the Cold War started, and that actually encouraged more countries to put more gold in the hands of England and America and Switzerland, where they thought it was safer. Another way the central bank run is manifesting as a shortage of gold worldwide, which will put a lot of pressure on prices higher as it becomes more and more difficult to actually acquire the gold. You're seeing longer times to deliver, but London's gold market struggles with 380 million ounce delivery backlog. The LBMA is typically sending out gold in 2 to 3 days, a typical settlement period. But lately, the delays in the physical gold deliveries from the Bank of England's vaults is now 4 to 8 weeks compared to the typical 2 to 3 day settlement period that you could get your gold back that quickly. And when you suddenly can't get your gold as quickly as you used to, that is technically a default. If you went into your bank, you had $100 in the bank, you said, can I have my $100? And they said, yes, in 4 weeks. That's a default. The disruption stems from a rapid outflow of gold to the U.S. COMEX warehouses, with 12.2 million ounces shipped over 2 months, amid speculation about potential U.S. import tariffs. LBMA data shows 279 million ounces stored in London vaults as of December 2024. Only 36 million ounces are theoretically available for immediate market use, revealing a critical liquidity shortfall against an estimated 380 million ounces of outstanding contracts. The delays effectively constitute technical defaults on these contracts, as sellers cannot meet delivery times. The central banks are now buying gold and they can't get enough gold. They're causing a shortage. There's a central bank run on gold. Market participants are scrambling to source physical gold through refiners and alternative vaults, creating bottlenecks. The end result of all this is that there's going to be empty shelves in the vaults in the Bank of England, banks in Switzerland. That's what comes after you start to see these delivery delays, these delivery defaults, where they say instead of 2 to 3 days as you're expecting, as was promised when you originally left your gold with us, now it's going to be 4 to 8 weeks. And it can get worse when it's not even about, as I say in my Upthinking book, it's not even about this, the price is more expensive because there's more competition, less supply. Sometimes the problem is the availability of the thing at all. Maybe you cannot get gold, regardless of what you'd pay for it. That's what happens when there's a supply crunch. Just like we're seeing building for decades and decades now, and I talked to you about it the whole way and explained it the whole way from back in the early days. And now it's all coming to fruition like I told you. The current crisis suggests much of the vaulted gold is pledged to central banks, ETFs, or foreign governments. With COMEX inventories hitting 926 metric tons, that's a 75% surge since November 2024. What else happened in November 2024? The election, yeah, but we also became a net gold importer from being a net gold exporter for many years. Finally went back to the way it should be. Private investors and ETFs are also jumping in finally. There was such a long time where the only people buying gold, retail people, were in China or in Asia. They are all just gobbling up gold. But in America, people are not even understanding the value of it at all, and they're not buying it. They don't own it personally. Most people don't own gold, and the ones that do don't own even close to enough. And I'm not giving you personalized trading advice, but if you're subscribed to my newsletter, you know my personal portfolio is almost all gold stocks, gold mining stocks, silver mining stocks. And that's the way that I invest. You do what you're going to do. That's the way I do, because I believe that gold is the number one play right now. And while the supply of gold cannot even come close to keeping up with demand, especially now that the whole world has changed their outlook on gold in a way that's never happened before, now that we're here, you think, well, maybe there'd be more gold production, especially with these higher prices. There's more production when the prices go higher because it makes it more economically realistic, but the production of gold based on the new exploration in the current mines, it rises by about 1% per year. It's not even close to the lack of gold supplies that we have for the demand, especially now that all these central banks have decided that, and they're aware that, it's really important that they're going to want to own some gold. And we're even seeing it on a state level now. There are some states, Wyoming is one, I think Idaho is one, where they're making a point of having their own statewide gold reserve holdings. A lot of the easier mines to get to are discovered and exploited. It's getting more and more difficult to find a really good quality gold mining location. There are some really incredible ones that I talk about in the newsletter, and you know what I like, but it's getting harder and harder, just like with oil too, with any kind of commodity. If it has value, it gets exploited. But new finds are more rare and they're more expensive to develop and operate. And to get a gold mine into full production can take 10 years easily. And that's even one of the stocks I said was the best stock pick I have ever made in my entire life. It's a little tiny gold mining company because you get it that early. It's a seed, and as it grows, as they develop the mine in the Golden Triangle, the value of that investment, especially as the prices of gold and silver increase so much, the value of that investment, without anything happening, just swells in value. To get in early on a mine like that and take it to the point where it either gets sold to a bigger miner or you take it to the point where it starts actually producing the gold available in its resource, you only need to find one or two stocks like that in your entire life. It's a game changer. You just have to have a ton of patience. The bottom line is that gold is getting harder to find, more expensive to extract. Central banks are buying more than ever. The whole market of availability is tightening up, and more is being bought at the same time. And it's completely, clearly obvious. You can check all this stuff. So if you hear this video and you know what I'm talking about and you pay attention to this stuff at all, you know that something's going on with gold, that there's definitely something going on that's never happened before right now. It's huge, and there's a lot of ways this could go. Almost all of them involve the value of gold increasing, and therefore the gold mining and silver mining companies, the good quality ones that are not going to go out of business, they're going to do tremendously well as the prices of the commodity increase. The central bank run itself will actually fuel itself, feed itself, as more and more central banks, and then eventually retail investors, professional investors start purchasing more and more gold. That will only fuel more demand. It's going to ignite a stampede. And I'm talking about worldwide. We're not talking about just America here. It's going to ignite a stampede into gold worldwide. And that's just going to push prices even further, even faster. But what is this all telling you? I always like to show you that it's all telling you one story. This central bank run is just another further manifestation of the admission of the entire world as we're slowly watching the death of the dependence on the American dollar. And if you want to benefit from my team and I and our information, then you can learn all about it. Start for $3, become a Peter Leeds Insider. More details about getting the stock picks, my personal portfolio, everything on the website. It's all there for you if you want to benefit from it. And please click like on the video. That helps us help more people to avoid the financial train wreck we're all going to be dealing with.